Hi, Benny. How are you?
Hi, Shara. How are you? Can you hear me?
Yes, we can hear you. Great.
Is it clear?
Yes, yes.
Yes.
Okay, good. Right. Good afternoon, everybody. Right. I hope all of you are well. I see that we have some existing student log in from Malaysia as well, Tech, and some from Philippines as well. Good to see you all here, and hope that everyone are fine and good. I heard that in Philippines you have lockdown. Is it still lockdown?
Yes.
Wow.
Yes,
Lockdown.
yes, unfortunately.
Wow, I don't know. That's terrible. Yeah, I just got my vaccinations last week, last Friday. Right, first dose. The second dose will be on the beginning of May. Okay, luckily I got Pfizer vaccine. Right, it's China vaccine. Oh, I worry. Anyway, back to what we're going to talk about this afternoon, right? My name is Benny, and for those of you who don't know me yet, I'm from Singapore, and I'm a multiple asset class trader. I invest in stock for long term. When I talk about long term trading, investing, I'm talking about at least minimum 1 year, right? 1 to 2 year. That is stock investing, and I also do option trading. Now, when I use option trading to buy into those stock that I want to own at a lower price because I'm not willing to pay at the market price. I want to pay the lower price, lower than the market price. So one way to do that is to use the option, right? Through options, I am able to buy the stock at below the current market price. Okay, so that is the subject for today. Then of course I also do forex. We also conduct forex workshop. If you are interested, you can always contact Carlos, right? The partner in Philippines, right? So I've been doing this financial trading for last 21 year, right, since 1999, and I started with options in 1999, and in early 2000 when forex market opened up to the retail trader, I also start to trade forex, and today I trade three market actually, right? So when my students sometimes they only learn how to trade forex and they say forex no opportunity, then I say well then go for options, go and trade option and do for stocks, right? Option trading usually the holding period when we open a trade until the trade close, it usually lasts for about few days to a week or two, right? That is the average holding period. For stock investing, once you own the stock, usually we are willing to own the stock for at least minimum a year. All right. Now for forex, we are usually talking of more for very short term, like intraday, all right, or couple of days. All right. So being a multiple asset class trader, it allowed me to look at different market at any point in time, right? If one market doesn't offer opportunity, I have opportunity to look at another market to make some money, right? So always we have opportunity if you are doing a multiple asset class. And I always encourage my students, right, to eventually, right, to train to become a multiple asset class trader. Okay. Now for today's subject that we're going to discuss and focus is only options. Now you can see from my slide here, trial income, guarantee profit. Now, I dare to use the guarantee profit, which I will show you later, right? Every trade we put in, we sell, we guarantee the profit that come into our account immediately, right? Through option trading strategy. Now, I'm not sure what is the apart from my existing student, right? For those new first time parties join my these kind of sessions, can we just have a short poll? And I just like to know what kind of audience I'm facing today, so that I can adjust my presentation or my sharing according to the audience, according to the level of audience I have. Is it okay? Can Cheryl, can you do a survey?
Rookie, new. So most of them are new, Benny.
Huh?
Yes, new
Okay.
with little experience.
Okay.
And then everyone else who answered are new.
Okay, new. Okay, so if majority of you are new, so what I'm going to do is I'm going to go very, very slow, right? And I have actually anticipate that I'm going to have many new audience today, and that is the reason why I moved some of the more complex strategy for today briefing. Okay, now when you decide option trading is actually very complex, but as a trader, we have the choice to choose whether we want to trade the simple strategy or a little bit sophisticated strategy. All right. So even with the simple strategy, we can make very, very good income. Okay. And that's what I'm going to share with you today. Okay. But when you eventually gain more experience in option trading, you want to go beyond. And the reason is why there are many option trader also fail is because they try to learn everything A to Z at one go, right? And they try to practice every strategy. The end of the day is because of the lack of experience, lack of capital, they overtrade and then they fail, right? So as a beginner, I don't encourage you to go beyond what I'm going to share with you this afternoon, right? As you get more experience, you can then do some more complex strategy. So you have a choice. Okay, I want to make it very clear. Okay, now, and can I know just another poll here? Very simple poll is how many of you have actually invested in stock? Anybody not invest in stock at all before? Can you just type it into the chat box? Cheryl, check for me.
Yep. So please type in the chat box if you've invested in stock in the past. We have one answer, yes. Okay, now two answers, yes. All right, most of them have said yes.
Oh, very good, very good. All right,
No.
very good. Now, the reason why I asked that is because if you have invested in stock, you will understand, you will able to relate what I'm going to share with you more. All right. So you can see from this, there are three quadrant right on my slide here. The first one, let's talk about this one first. All right. This is before you own the stock. Before you own the stock, right? We can already create some income for ourselves. So then you may ask, how can I create income for myself before I even own the stock? Where this income come from? Yeah, that's through option trading, right? So what we can do, right, before we own any stock, we go to option market and sell a put option, and that allow us to receive some income, right? Now the detail I will explain to you as we go, right? Now I just give you a overview, right? So before we own the stock, we already start generating income for ourselves. Then after sometimes we generate income for ourselves every month, month after month, and eventually we own the stock, right? Eventually when we own the stock. Now, traditionally, as a stock investor, when you own the stock, let's say you buy the stock at $10. Now, in order to profit from this stock investing, you need to wait for stock price to go above $10, right? Then you can sell your stock for a profit. The problem is, for the price from $10, let's say you want to sell the stock away at $13. You want to make $3 profit. But from $10 move to $13, we have no idea how long it's going to take. It can take within a day, a week, a month, months, maybe 6 months, or maybe years also never go there. We don't know, right? So it's a big question mark. We do not know when the share price, the stock that you buy at $10 is going to move up to $13 so you can sell it for a profit. We do not know. So you wait. Traditionally, you wait. So while waiting, no profit because you need to wait, right? So what I'm offering today here, once we own the stock, while waiting for the stock price to go above your buying price. We want to receive income while waiting for the share price from $10 to move to $13. So now you can see, before we own the stock, we want to receive income. We can receive income. Once we own the stock, while waiting for the share price to move above our buying price, we again receive income. All right, so we have two sources of income right now, 1 and 2. Now, eventually, when the stock that we purchase at $10 and move to $13 and we sell at $13, we make $3 profit. So now we sell our stock, we make $3 profit. Again, this is income for us. So now we have no more stock. We got zero stock. This is what I mean by the trial income guaranteed profit. So after you have sold your stock, what are you going to do? You're going to start all over again. Repeat the cycle all over again. You can never lose money. So long as you are not greedy, you sell what you can buy, right? And you just continue to make money. Without first phase, without owning the stock, you already generate income. That's the first income stream. Once you own your stock, while waiting for the stock price to go above your buying price, you generate second stream income. Once your stock sold away for profit, that is your third stream income. So once that stock gets called away, no more stock in your position, in your account, you look for another stock to repeat the cycle again. Again and again, again and again. Right? This is the best investment strategy out there. It's very simple to execute. You don't need to have a very complex option strategy. Now, what is stock options? Stock option is the right to buy a specific number of shares at the predetermined price. All right. So it is as if like you want to buy a house, you want to buy an apartment. And when you go and do for house hunting, you like some house that you see, but you are not going to pay 100% of the price. You put maybe 10%, right? Or let's say 5% down payment to secure the house or the apartment that you like, right? This 5% down payment is to prevent the seller from selling the house to somebody else, right? And then you tell the seller, okay, in 3 months' time or in 1 month's time, I will come back and pay the balance 95%, right? So you are paying options money to secure the house from selling to someone else, right? And let's say after you put down the option money, and you promise that in 1 month times you are going to come back to pay the 95%, but before the time's up, for whatever reason, the property price goes up very high, right? Maybe due to certain government policy, right? The property price rocket up. So now the property that you want to buy that worth, let's say 1 million, agreed price was 1 million, but now the property price goes up to, let's say, just example, 2 million. You can use this option contract to sell to somebody else, right? Somebody else will buy from you because now your option contract is worth more than that, right? Because the option contract specify that the seller will sell to you at 1 million, the house. But now the market price worth 2 million, right? So you sell the contract away to somebody else who has the money to buy the house because you don't have the money, or you doesn't intend to buy the house anyway, right? So that is option contract. So that is exactly what I'm talking about, stock options. Now, the other thing is option can be less risky for investor when we compare to stock investing. Because the reason is because we don't need to pay the money outright to buy the stock. We only pay the option money, that down payment of the stock. For example, 5% of the stock value. So if the stock really go down all the way to zero, your maximum loss is only the 5% that you paid out. But if you buy the stock 100% outright, something happened to the company and the stock price go down to zero, you lost everything, right? So option is actually less risky when we compare to investing in stock. Now look at this guy here. This guy from Cebu, Philippines, Cebu. It's the same thing that the concept which I just explained to you, right? He buy this company, HIMX, right? When it was trading at about $11, right? $11 in on 2nd of February this year for $1.05, right? But he actually get even better. He get it at 90 cents only. I paid for $1.05. He get in for 90 cents only after he received my trade alert. Because after I share the trade alert, the price will just go up and down, continue up and down, right? So he managed to get in later and he get in 90 cents. Within a week, within 1 week, this share moved from $11 to $18. And because the share price goes up, the premium also go up. The option premium also went up to $5.20. So we are talking about 2nd February enter, buy. 9th February, the option premium worth $5.20. Why the option premium goes up from $1 to $5.20? Because the stock goes up, right? So in other words, when you are trading options, you are as if trading stock. No different. The only difference is you only pay out 5% of the stock value, not 100%, right? So this guy came out with huge money, huge profit, right? He for 5 contracts, he made $2,150 US in 1 week, right? Now, can he buy the stock? Because right now the stock is trading at $18. He has the option to buy only at $11, even though the trade $18, right? He can. So if he go and buy the stock at $18, multiply 500 share, right? He will need, but he don't need to pay $18. He only need to pay $11. So that means that he need to come out with how much? 550, right? In order to buy the stock. But he doesn't want to own the stock, and he sold away his option for a profit of 520 minus 90 cents. That is his profit. He doesn't want to own the stock. So as if like the example which I share with you, but house hunting. House price goes up. He doesn't want to buy the house. He just sell the contract away to somebody else and make the money. And that's stock options trading all about. All right. So with this example, I hope that is now clearer to you for those people who are new in option trading. Okay. Look at the ROI, 395% in 1 week. 395%. Now, many of you just on traditional business, how much? 100%? 10, 20% in 1 year. Option trading, 395% in 1 week, right? These are all real student, real example, real money, right? This guy from Philippines, Cebu. Now, I'm going to give you one example here to do a comparison between stock investing and option trading. Now, let's say Uber. Everybody know Uber, right? It's a competitor to Grab, right? Now, Uber trading at $53 now, and you want to own 100 share of Uber. So if you buy 100 share of Uber, right, you need to come out $5,300. Okay. Now, but you go to option market and buy one contract, because when you buy one contract option, it's equivalent to 100 share of Uber. Right. So you buy one contract option, 100 share is the same. The option only costs $1.30 a share. Multiply 100, your capital needed, right, is only 130. Now compare 30 that needed to control 100 share of Uber with against this $5,300 when you buy outright. Now, some of you in my wallet, my account is so small. How can I buy the US stock market stock? They are all so expensive and all value in US dollar. Now, can you have $130? I'm sure if you are investor, you must have this kind of money, right? Do you need 5,003? You don't need, right? Even the stock is trading at $50, all you need is only $130. Usually in the option market, right? So now let's say Uber have gone up from $53 to $57. So as a stock investor, you make $4, right? $4 multiply 100 share, your profit is $400. Okay, so ROI, you come out 5,003 to make 400, your ROI is 7.5%. Now take a look at option market. The option price go up to $5. Why $5? Because the stock market, the share price go up from 53 to 57, right? The share price go up. Therefore, option price also follow. So option is just like a baby of the stock. Stock is like a parent, like mother, right? You trade the baby, you don't trade you trade the child, right? So you pay the child price, 130. So 130 to $50, you make 370 per share. Multiply 100, your profit is 370. Your ROI is 284% compared to owning a stock. So can you see the difference right now? Why in the world those people who are make a lot of money investing in stock, they don't actually invest in stock. They use the options to invest in stock. And you can do this, make this kind of income and money from your comfort of from your home without leaving your house, right? You can make this kind of money without depending on whether another customer is going to buy from you or not. I know with the current crisis, many people lost their jobs, and what they do is they revert to what? Online selling. They go and online, set up an online store, and they start to sell the product online. The problem is, before you can sell a product online, you must get someone to design the website, you spend the money, etc., etc. Now, you still cannot make money, right? Because you need to do marketing to make sure that people, the public, people, the stranger who do not know you, know your website, know what your product are selling. So you need to spend some marketing dollar. Now, when you spend some marketing dollar, you are competing with so many marketers, right? So your advertisement might not get in front, and people then might not see your advertisement, right? And you end up what happens? Nobody know your website, nobody know your product, right? And don't come to you and buy from you, right? So online business, no guarantees because now they are so competitive. Everybody worldwide, everybody go online. You're competing not just in Philippines, you're competing with other people outside the whole world, right? So your success in online business also depends on other people who are willing to buy from you. If they don't buy from you, how can you make money? You can't make money, right? But in the training business, it's different. As long as you are good, right, you can make money. You don't require anybody to buy the stock or anything from you. You make money. To me, I think this is the best business. I hate to sell, right? I hate to sell, but I think this is the best business. Think about it, right? Okay. Now, let's think about the downside for stock investor. If let's say Uber, something wrong with the Uber company, the company something wrong, right? And the company went bankrupt. So what happened to the stock value? It becomes zero. And imagine if you hold 100 shares of Uber and you come out 5,003 to buy 100 shares. So now your maximum loss is $500, $5,300 if you own the stock. If you trade stock through options, you only pay $1.30 a share for 100 shares. So you pay $130. Okay. If something wrong with the share company, the maximum loss is only the premium that you pay out, 130. But look at the return that you can get from the 130, 284 compared to 7.5%. Right? So in this slide, it explains very clearly why option is much more superior than investing in stock outright. Right? Option trading, you require very little capital. Your ROI is much better than investing in stock, buying stock outright. And anything wrong with the company, your loss is much, much less compared to owning a stock. So why you want to invest in stock? Why not go to option first to own the stock? All right. Now, of course, this is something that's not available in Philippines, right? I know that Philippine stock market don't offer stock options, and therefore you must only trade with US stock option, US stock market, right? Now, let me explain, show you this slide very fast. Disclaimer first, right? Do not, I just go to do not assume that what I share with you is 100% will make money, right? Because market we are dealing with a market which is probability. We are dealing with probability business, right? And we will have losses, right, from time to time. And therefore, you must risk only the money that you can afford to lose. Do not go and borrow money and trade. That's the worst thing can happen to any trader. Trading is deal with there's risk involved, right? And you're going to have a losing trade. Now, people who believe that holding a 9 to 5 job is never enough, right? You can never reach your financial freedom and your goal by working very hard on a paid job, and you believe that you need to invest, and you believe that you can create wealth through investing, but you don't know how, and you need a mentor, right? Then this program is for you. Also, if you are already trading options and you are losing money or no consistency, this program is definitely for you. Now, third, if you are at this age group, 40 to 50 years old or more, right? And you find difficult to save money, enough money for your future retirement, which happen to many people, not just in Philippines, even in Singapore, in Malaysia, I guess it's the whole world, because inflations go up, right? The money that we earn every day, right pocket in, left pocket out very fast. It is very difficult to save enough money for our retirement. Never enough, right? Now, if you are in the same group of people, have the same difficulties, come and join this program, right? With this program, you can average make about 35% to 40% a year. A year. When you are already at this group and you have not even started your retirement yet, traditional way of investing and saving will never enough, right? You need to do something different, right? Investing option can help you to create a retirement fund in a short period of time. Okay, so this is very important, right? A lot of people don't have a retirement fund set up yet. If you are looking to start a new business, right, at the current crisis, please don't. Everyone are finding difficulties to get their life going. If you start any business, they where got buying power to buy from you, right? You spend all the renovations on shops, hire all the people, train all the people, and at the end of the day, you need customer to come and buy from you. And these people already have difficulties to get their daily life ongoing. They where got money, extra money to buy things from you, right? So don't waste the money, right? Invest in a program that you can make money without any customer. That is option trading. Now, a little bit of myself. You can see that I've been doing this for 21 years, right, since 1999. I also trade forex, which I explained to you just now. I teach us in a few different countries. Okay. Before the lockdown, I fly to Philippines quite often, Manila and Cebu. All right, but it has been a year no traveling. All right. As I mentioned, and many of you here are stock investors, so you understand what I'm going to share with you. The old way of investing is you pick a stock that you like to own, you wait for the price to come down lower before you buy the stock. And while you're waiting, that waiting time, it can take long time, right? And while you're waiting, no income. This is very important. No income. Okay. Let's take an example on this Uber. I don't know why I always use Uber. Uber again. Now, Uber was trading at about $32. Okay. And if you are a technical trader, you go to your chart and say, oh, well, there are a lot of support here. A lot of support here. What price is it? Oh, $27. Okay, let's wait until the Uber come to $27, then buy. $32, I'm not interested. I want to buy Uber, but not at $32. 27, yes, I want to buy. So what happened was you wait. That was in about May. You wait, May. So 1 month passed, 2 months passed, 3 months passed, 4 months passed. This is $27. The Uber come out $27? Never. So you've been waiting for 4 months. 4 long months. Uber did not come down to $27, the price that you are willing to buy. And it continued to go higher. All right? You miss the opportunity to ride the stock. You believe in Uber will go higher, but you want to buy a lower price. So you wait. While waiting, no income. And not only you lost the opportunity, you have no income for 4 months. This is the old way. Right? This is the old way. Now I'm going to share with you the new way of investing. We pick the same stock, Uber, that we want to buy, and we believe that Uber share price can go even higher. And that's the reason we want to buy Uber. Okay. Now, and we have to wait because we are not willing to pay at the market price. Right? As I mentioned just now, we use options to buy, to own the stock below the market price. Right? So we pick Uber as a stock, the company that I want to own, but I'm not willing to pay at the market price. I only willing to pay below the market price. So let's take a look at this example again. Uber. Uber, this example was trading at $34. Okay. Then I say, okay, well, again, I'm not going to buy at $34, even though I like Uber, but I'm not willing to pay at $34. There's no. But I say that if Uber can come down to $30, yes, I want to buy. So what happened is I wait for Uber price to come down to $30, right? No different from the old way. But the only difference is I went to the option market to sell a put options on Uber at $30, right? At $30. So what do I mean by sell a strike price at $30, right? And it's going to expire in 29 days. That time this example was taken last year, right? It was supposed to expire. The contract going to expire in 2nd October. Now, every contract have a lifetime. Just like if I use back the example, the house hunting, you put a 5% deposit as an option money, right, to secure the house from selling to somebody else. The seller, the house owner, after taking your option market 5% of the total sales value, they will keep the house for you at the agreed price for a limited period, not forever, right? Maybe for 1 month, for 2 months, for 3 months. If after 3 months, you don't go back and pay off the balance, the house owner will forfeit the 5% deposit and look and sell the house to somebody else. All right. Option market, same thing. There is a limit set on how long this contract is going to last, right? So I like to buy Uber, but not at the $34. Yes, $30 I want to own. And I go to the option market and say, if the Uber trade below $30, yes, I want to buy. But this contract is going to last forever. I only promise to buy Uber below $30 for until 2nd October, which is 29 days from the day I created this contract. 29 days. This contract only lasts for 29 days. So after promise this, that I will buy Uber at $30, right? With this commitment, the market will pay me between 46 cents to 55 cents per share. Okay. Now then you ask why the market want to pay you this money? Because I promised to buy the Uber at $30. So even the Uber price trade below $30 to let's say $27, I still have to buy at $30. And for that promise, I get paid this premium. And this premium is my income. for the next 29 days. So if I sell 100 share, right, you multiply, let's say we take the mid price, 50 cents. So how much income I receive immediately? I receive $50 US, because for the next 29 days. All right. So if I have more money in my account, I can sell 1,000 shares. So how much income I receive? Well, $500 I receive is my income for the next 29 days. If you have more income, more bigger account, let's say you sell 10,000 shares. Your income is $5,000 US for the next 29 days, right? So you can see that this is the business that you decide how much are you going to get paid, how often are you going to get paid. You decide. All right. That's the beauty of it, right? You can see it. You decide. So whether you have small account, big account, that's why just now I say if you have more money, that's even better because you can create a lot more money, right? So if you use this example, let's say in 3 months, Uber did not trade below $30 for the next 3 months. So every month after the contract expire for 29 days, the contract expire worthless, I keep the first $500, I go and create a second contract, which lasts for another 1 month, which let's say assuming I pick up another $500. Second month, Uber did not trade below $30. And again, the contract expire worthless. I keep my second $500. I go to the market, create a third contract, and we repeat again and again. So 3 months later, I already pick up $1,500 credited in my account, and I still don't own the stock yet, right? So this is what I mean. That imagine that the first slide I show you, before we own the share, we can make income already, and this is what I meant, right? So let's say what happened after the third month onwards, the Uber share trade below $30. Well, I buy the share. That's all. Nothing else. I buy the share at a lower price. Why not? Right? So let's finish off this example. So with 1,005, right? My ROI is 25% in 1 month. If you annualize it, that is 264% in 1 year, right? So again, compared to those traditional business ROI, 10 to 20%, right? And you depends on people, your customer to buy from you. If customer don't buy from you, you can't even make this money. You end up losing money. But in the option market, your success do not have to depend on another customer who want to buy from you. You decide how much income you want to create every time. All right. So that is what we call pay to wait strategy, right? We get paid while waiting. We get paid while waiting. Okay. Now then some of you might be thinking, so Benny, what happened if Uber price trade below $30? Well, with Uber price trade below $30, then we buy the share. We buy the share at $30. What's so bad about buying the share at $30? Because remember, Uber was trading at $34 market price. $30 is what I want to buy. So now I like this company. I pay at the lower price, which is $30. Why not? Now I own this company for only $30. That's it. All right. So then some people ask again, say, Benny, then it looks very good, right? You name the price that you want to own. While waiting, you get paid. But what is the risk? Well, it's just like when you invest in stock. When you own a stock, what is your risk? The risk is what? The risk is if the company continue to stay low and did not trade above your buying price, your capital gets stuck, right? Your capital is not producing any yield. And of course, the worst is if the company go bankrupt. That is the worst risk, right? That one is nobody can avoid, right? So that's why when you pick a company, you must pick a company that at least for the next 1 year you know, or you're quite confident that the company will still be there, right? You don't want to buy a very speculative company and end up that the company can go bankrupt because high gain, high they call it what? High risk, high reward. You don't want that, right? You want to buy something, some company that is at least for next 1 year, if you think they'll be still around. Okay. So that is no. So nothing is. So I hope this you understand now. That's option, right? Now what is option? Option buyer pay for a right to buy at the agreed price. Option seller receive the premium from the buyer, right? And they assume the obligation to sell the share at the agreed price, right? That is the definition of options. Option buyer, they pay a premium to gain the right. The right to what? The right to buy or sell the share at the agreed price. Option seller, on the other hand, receive the premium from the buyer, and that premium to the seller is the income, right? And income after receive the money from the buyer, the seller have the obligation to provide the share or buy the share from the buyer. So it's a contract between the two trader, the buyer and the seller. Okay. Now some of you might not still don't understand. So let me use this car insurance to illustrate even further, right? Now let's say you own a car. Now before you can drive the car on the road, you need to go and buy an insurance to insure your car first, right? So you go to the insurance company and you say, okay, I want to buy an insurance for my car for next 6 months. You pay the insurance company a premium, right? And in the next 6 months, within the next 6 months, if something happened to your car, let's say your car get into accident, the insurance company, after receive the premium from you, they have the obligations to pay the repair cost on your behalf if it happened within the 6 months, right? Because that is what the contract valid. After 6 months, expire worthless, right? So let's say within the 6 months, nothing happened. So what happened is you renew again after the next 6 months. Okay, so that is car insurance and car insurance company. So buying and selling option is something very similar. The option buyer are as if the car owner, right? You pay a premium for safety, for security, right? The car insurance, they after receive the premium from the car owner, they have the obligation to repair the car cost. So the car insurance are as if, or rather the option seller are as if the car insurance company. All right. So between the two parties, I prefer to be in the insurance business model, receive premium, because I don't see any insurance company that go out of business because of no business. Insurance company always make a lot, tons of profit, right? So I want to be a insurance company or insurance business model, selling option. We want to be selling option. In our program, we sell option more. Do we buy option? Yes, we do, but we sell more than buying option, right? Selling option has highest odds of winning. Okay, because when you are buying an option, you have to pay a premium. When you sell an option, you receive premium. Okay. Now some people might ask, Benny, why would people want to pay you a premium? Right? Why would people want to pay you a premium? It doesn't. Why are these people stupid or what? Why would they want to do that? Right? Now people do that. People go to option market for two reasons. One is for speculations. One is for hedging purposes. Now, why people want to pay options? First, let's take this example. This is the SPY, right? It's an ETF of the S&P. Right now, let's say this investor, he bought SPY at this level, at 350. And now SPY is trading at $410, $11, right? You look at this movement up, it's parabolic, right? With this kind of movement, what goes up fast, it will come down even faster, right? That's what the belief, right? And let's say this investor believe that the stock market is likely to continue to go even higher. There's a room for even higher price, and he doesn't want to close his trade yet. But at the same time, he doesn't want to return all the profit that he make from here to here, right? He has no idea whether the price is going to go up or it might come back down before it go up. So he doesn't want to miss the lost the profit that he already made. So what he can do is he can hedge. How he hedge? He go to the option market, and what he can do is he buy an option, right? He buy an option to protect the price going down. Meaning, say he buy a put option, right? Let's say he buy a put option at $390. Example, yeah. So when he buy an option, he need to pay a premium, right? So what he meant is, he's as if they're buying an insurance. If this S&P from 410, it dropped below 330, right? It means that his option is making money for him. So the stock is losing money, but option is making money for him, right? So in a way, he's protecting his portfolio. Now, option has only two types. Very simple, right? It's only one call and one put. That's all. Very, very simple. Not complicated. Okay. What makes it complicated is when we try to apply it concurrently, right? That's a little bit complicated. Okay. So now let's talk about call first. Now, when you are bullish, you expect future price to continue to go higher, you can buy a call. If you are bearish, you expect price to go lower, you can sell a call. Now, what's the difference? When you buy a call, you need to pay a premium. You need to pay a seller a premium. When you sell a call, you receive premium. That's different. Another difference is one is bullish, one is bearish. All right. Now, another one is put. If you are bullish, you can sell a put. If you are bearish, you can buy a put. Okay, again, when you sell a put, you receive money. When you buy a put, you pay money. Again, that's the difference. Okay, so some people say, well, Benny, what's the difference? Call also bullish, put also bullish. So why would people want to do that? Right? So to sum up, all those will be taught during the workshop, right? To the detail. To sum up, when you are bullish, you can either buy a call or you can sell a put. If you are bearish, you can either buy a put or sell a call. Now, when to buy a put, when to sell a call, different scenario, different goal, different objective, right? We'll talk about more in option in the actual workshops. All right, so let's talk about another. I'm going to give it another example because I want to make sure that you guys understand, right, the strategy I'm talking about, right, is guaranteed profit. Okay, now let's talk about Citibank, and I don't think Citibank can go out of business in 1 year from now, right? So it's a good bank. So I want to own some share in Citibank, but it was trading at $49.45, and I want to own Citibank, but I am not willing to pay at this price. I say I'm only willing to pay at $40 in the next 42 days. So in other words, this contract only lasts for 42 days. And if the price trade below $40, I will buy. That's my promise. And for that commitment to buy at $40, I get paid 71 cents a share. So if I have sell 100 share, I receive a premium of 71 cents multiplied 100, that's $71 US. Credit into my account immediately. If I have a bigger account, I sell 1,000 shares. I will receive $710 immediately credit into my account. So in the next 42 days, as long as Citibank did not trade below $40, I keep my $700 as my profit. If Citibank drop below $40, then I just buy the share because I want to buy the share, but not at $49. At $40, I want to buy. So now What's so bad about buying the share? I buy the share at $40 at the lower price, right? So don't be frightened when you get to buy the share, because this $40 is what you want to buy. You tell the market, this is what I want to buy. So now the market is offering you. So what's the complaint? And while you're waiting for the share price to drop to $40 from $49, you get paid. If you sell 1,000 shares, you already make $700 and $10 before you even own the share. Can you see the beauty of this business right now? Right? If you don't do this investment, you are really missing something in investing. Right? If you are already in the investing world and you don't sell option, you are really missing a big piece. Okay, so in the next 40 days, or rather 42 days, you can see that this is Citibank, right? In the next 42 days, the Citibank can go up, or it can just go sideways, or it can go down against me. As long as it did not trade $40, I don't have to do anything. After 42 days, right, the Citibank can just go up and down, or even down and come back again. It doesn't matter. As long as upon this contract expire, Citibank trade above $40, nothing need to happen, nothing need to do. I just keep my $710 as my profit. Nothing happened. I go and sell again to create more income for myself. All right. Okay, that's one example. So let's take a look. Now this is called the option change. Now, a lot of people, when they look at table like this, they're intimidated because they say, "Wow, so many numbers, so complicated." Actually, it's not complicated, right? Now we are selling a put at $40, meaning to say that we are willing to own Citibank at $40. That's it, right? So we look at the put, because we are selling a put. Now in this put here, in the option contract, there's always an expiration date, right? So expiration on the 21st August, which is 42 days from the date I create this option, 24 August. The strike is the price that I'm willing to own Citibank. So $40. Right? So when I say I agree to buy Citibank at $40, how much I get paid? Bid and ask price, which is this price. I get paid between 71 cents to 75 cents. All this you can just forget it for the time being. It's not important right now, right? So you can see that it's not difficult to understand this table, right? So I get paid between 71 cents to 75 cents in the next 42 days. So long as it don't trade $40, I keep my whatever money I keep for $710. Then after expire, I go and recreate a contract again and continue to receive money, right? While waiting for the Citibank share to drop to the price that I want to own. Okay, for $70, yeah, this is an example. This is the same example, Citibank, right? Now let's go another example. This time is Nike. I use a different company, Nike. Now, do you think Nike can go bankrupt in the next 1 year? I don't think so, right? It's a good company. It's long enough. It's a profitable company. In the next 1 year, even the business turn bad, it should not go bankrupt in 1 year, right? So therefore, I like to own this some share in Nike. But Nike was trading at $76. And I'm not willing to pay $76, or rather $78. I'm not willing to pay $78, right? So I'm willing to pay for only $65. Now, why $65? Well, you will learn this in the workshop. I can pick and choose whatever price I want to pay. As a trader, you can even choose even lower. You can even say, I want to only own Citibank at $50. It is trading at $78. I want to own only at $50. Yes, you can. But you receive almost no premium, zero premium. But if I say I'm willing to own Citibank at $65, I receive 70 cents premium. But if the Citibank was trading at $78.86, if I say I'm willing to own Citibank at $75, closer to the market price right now, I get paid even better, 150, almost double from what I get 70 cents, right? Expire in 34 days, this contract. So what it means is in the next 34 days until 8th of May, if Nike did not trade below $65, I keep this as my income. 70 cents as my income, right? So 70 cents as your income. So if you sell 100 shares, that would be $70. If you sell 1,000 shares, that would be $700 as your income credited in your account immediately, right? And you repeat this process again and again until Nike, the price drop below $65. Then you have to buy Nike at $65. But in the meantime, every month you're picking up $700 for every 1,000 shares. All right. So these two examples, I hope, should give you a very clear idea, right, what this strategy is all about. This is first stream of income, right? So now, some of you say, Benny, how about the second stream of income? You are saying triple income. How we make the second stream of income? Okay, let me share with you, bring to you to the option chain. Yes or no?
Yes.
All right. Okay, now I want to show you this. This is Uber. Now remember, just now I thought Uber $53. $53 is where it's here. The strike. Right? So we sell the put to make the income. Now let's say after some months we sold and we now buy the Uber at $53. Okay, and what in the meantime we are already receiving money, right? We are already receiving money. So now we own the Uber at $53, and I want to sell for a profit. Let's say $60. If Uber price go up to $60, I want to sell for a profit, for $7 profit. All right. So I have to wait. I don't know when it will go up to $60, but I have to wait. But while waiting, I want to get paid. Now what I explained to you is I already own the Uber share, right? Previous two example is I have not yet owned the share. Now the example, the second stream of income is we already own the share, right? So I own the Uber share at $53. I'm willing to sell my Uber at $60, but Uber is not trading at $60 yet, right? So I can't sell, right? I have to wait. But I can go to the option market and sell another option at $60. Because this is the price I want to let go my Uber share. So I go to the option, this time it's call, just now was put, right? So I look to your left, look at the bid and ask price. What is the premium I can pick up? I can pick up between $1.92 to $2.15 a share. So if we get the mid price, let's say $2, we get paid $2 per share to sell an option at $60 strike, which will expire in 6th of May, 26 days from now. So in other words, from now until 7th of May, total 26 days, if Uber price go up to $70, I can only sell as $60. Right? I can the different extra $10 is none of my business. I can only sell at $60. And for that commitment, I get paid $2 for the next 26 days. Even I can sell my share away at $60. Remember, I bought it for $53. I make $7 profit per share. So if I have 1,000 shares, I make $7 per share. I get $7,000 profit If you 100 share, you get $700 profit by selling the share. But in the meantime, while waiting for the share price to go up to $60, I get paid $2 per share. $2 multiplied 1,000 share. While waiting for share to go up to $60, in the next 26 days, I already have a profit of $2,000 in my pocket while waiting for the share price to go up to $60. And if the share price go up to $70 above my $60, I still have my third income stream, which is sell away the share and make a profit of $7. This is what I meant by triple income. And once my share gets called away, I go and look for another company and repeat the process again. So that is the three income stream which I promised you just now. The total value for this program, right, is 3,541. But we are not asking for this from you, and this is the value that you need to know, right? The value of the program is only $497. That's it, right? The trade was posted in January. That is a stock, the ticker symbol. The option is to buy a call. We expect price to go higher. Expire on 19th of March. Strike price at $20. So what it means is from 20 January until March, until before 19 March, I believe that UAA is likely to trade above 20. That is the meaning, right? So how much premium we pay? We pay $1.35. Okay. So if you are a stock investor, you believe that the UAA potentially can go higher. So if you buy the stock, $18, right? So if you buy the stock at $18, multiply 100 share, you will require $1,800 to buy 100 share. But in the option market, the premium is only $135. You can buy one contract which equivalent to 100 share. Your premium that you needed to buy this is only $135. $135 compared to $1,800. Can you see now? Right? In stock investing is capital intensive. By using options, right, we have reduced our capital needed to be less than 5% of the $1,800. And if this share price goes up, our option premium also go up from 135. It also went up, right? So in this example, you can see that we get in on the 20th of June, or by 5th of February, because of the share price have went up from $18 to $20, our option premium now worth $2. We bought it at $1.35. Now the option worth $2. We can sell for a profit of and make a profit of 65 cents a share. 65 cents a share. If you have 1,000 shares, that worth $680 US. How long? 2 weeks. 2 weeks, right? So that is the example of call options. How we make money in the option market. Don't invest in stock, right? Stock is capital intensive. Another example, right? This is example is on the 1st of Feb. We want to buy. We expect ACB, this company ACB, to go up, right? So we pay between $1, about $1 for this trade. And this trade, this guy, Eva, he even better, right? I shared a trade alert to buy about $1. He bought it for 83 cents only. Okay, 83 cents. And this, it went up to about $2, I believe, right? I closed my ACB for one profit of $1. So the premium actually 1st February the trade closed. The 3rd of February, this share price go up. My premium also went up to about $2, right? I pay for $1, I make $1, so the premium was $2. After 2 days, I make $1. This guy, he made more than $1 in 2 days, right? We don't even have to buy the stock. We don't have to. We just buy the option. So 95% ROI in 1 day. 1 day, 95%, compared to your traditional business, 10 to 20%. Yeah, sorry, this ACB, this is the one. Now, we went in here, it was at $11, right? So if you buy the stock at $11 for 100 share, your capital needed will be 1,100. That's what you needed to own 100 share. But if you use the options, you only pay $1. $1 multiply 100, because your option in option market, you only required $100, and you can control 100 share of ACB. If you invest in stock, you need to have 1,100. Can you see now? The capital needed is much lower. But when it go up to when the ACB went up from $11 to $14 in 1 day by $3, our option premium increased from $1 to $2, and we sell it for a profit, and our ROI is 95% in 1 day. Now, another example, GSAT. We get in at we get in at 20 cents on 21st January, and after 17 days, you see the share price had went up from $1.40 to went up to $2.20 after 2 weeks, or coming to 3 weeks. The price went up from here up from 140 to 220. Our option premium from 20 cents that we bought, it went up to 55 cents. If you bought it for 1,000 share at 20 cents per share, all you take is $200 is all. That's all from your capital, right? You make $550. Your ROI 175% in 17 days. So now I hope you can see that the kind of potential profit anyone can make. It is not difficult, right? If you have never do this before, it sounds complicated, but it is not. So my next workshop is this month, 17 and 18, right? 2 days. Each day is 3 hours. Between 2 to 5 p.m. Total 6 hours. Your investment is only $497.